Happy CPI, everyone. I hope you haven't lost your fund. I hope your account is still stable. I hope you didn't go all in, like they used to say, go hard or go home. I hope you haven't gone too hard on CPI and you are not home already. So before we actually jump straight into the technical analysis of today's session, let me quickly update you on what we have concerning the economy. So yesterday, which was Tuesday, the 14th of January 2025, we had core PPI came out, core PPI month on month and the PPI month on month came out yesterday, and it came cooler than expected. And by cooler, I mean it came shorter than expected, meaning inflation in the United States pertaining to the producers is cooling down, is slowing down. That is good for what? For the economy, because they can now spend lesser money producing stuff, and probably they're going to sell maybe expensively. I don't really know, but at least on that aspect of the economy, the inflation is coming down. And today as well, we have CPI. It just got released. It just got released like an hour ago. The time is 3:25 p.m. So it was like 55 minutes ago. So we saw a cooler inflation on CPI as well, which market was actually forecasting 2.6% for the CPI year on year, and they were forecasting 0.3% for the monthly CPI, which is CPI month on month. All right. However, it came shorter than expected for both by 0.1%. All right. So that is also good. That is putting money on the people's hand. But you know one thing about the economy, because even though a lower in inflation, a cooler inflation is good for individuals, for consumers, it is not good for the currency. That's why we saw DXY drop the way it did right in front of you. All right, so now let's jump straight into what I actually have planned today. So seeing what happened to PPI yesterday, which was around here, the market was quietly retracing yesterday after it dropped very drastically on Monday. Okay, as it was retracing gradually around there, PPI came and it dropped dramatically. Once it dropped here, all right, this is the hold up today anyways. Okay, so far so good. This is what CPI had done. So to you might be like, maybe it's not too much, but genuinely it's actually not much, because if you look at the daily bands, all right, you will still notice that DXY is still quite strong. As you can see right on the chart, you can see the momentum is still very much strong. We have series of higher highs, higher lows. All right, so which is still very strong. However, for intraday trader, or let's say for short-term swing trader like myself, that I used to look for entry on 1 hour time frame and wait for maybe a week or 2 weeks to target and get some profit from the market, it is quite devastating, because personally I was looking for a rejection right at the top here, and if that is broken, which actually did happen, I was looking for another entry at the bottom here. So that is my plan on DXY. I'm still quite bullish on DXY overall, but what does this imply on the major pairs that we all love to trade? So let me start with euro dollar. On euro dollar, I took a trade last week Monday, which I joined right below here, right here. If you didn't catch up on that video, you can just check the previous video I posted. You will see the euro dollar trade right there. Now it went really well, and I got tapped out right here because I was trailing very hard. So I was able to close 2.5